YouTube. This is Terrence Ray with a stock market update. As you can see in the title of this video, unusual option activity. I'm going to go over some large trades in the option market that may give us a little bit of sense of, what we can expect, to come in the market. Basically, for the most part, no one knows exactly what's going to happen either way, but we can look at the market and see where people are placing their bets on space, especially the large traders. What we can see what they think, right? And then we can kind of see, let's kind of get into the head on why they're making these trades, right? So let's get to the charts. And right now, the S&P 500, we got it. The futures are up about 23 handles. The NASDAQ futures are up about 91 handles. The Dow futures are up about 65 handles currently, and the Russell futures are down about 8 handles. And for the most part, whenever I see like the Russell down, I've noticed that the Russell will lead the market, right? Those are your mid cap stocks, where in this market, everything is a large cap, to be honest with you, but it's defined as like mid caps. And so you'll see those, they are generally a little bit more volatile than the large caps. Something like a Apple or something like that take a long, doesn't move as fast as a smaller cap stock. So let's take a look at what the premise of this video is going to be on. Right now, the market to me is a big nothing burger today. You do have some vol, so if you've sold options, your options have come in. The VIX is down almost 10% on the day, 9.87% to be exact. So what that means is if you're an option seller, you've been selling premium, your options have contracted, right? The volatility has contracted. So that means that the price of the options that you sold have come in. So even if that's the thing about selling options. So you could be neutral to bearish or even bullish. As long as you sold options today, you're making money, right? Even if the market you're okay with the market standing still and vol just decreasing, because basically you're getting money on time decay and vol decay. I'm going to pull up the Qs. This is the triple Qs, and you can see over here what I got mapped out. Now that doesn't mean anything that this is going to actually happen. I do have the NASDAQ projected is going down based off of my technical analysis. I got it going down. I got us going down to around 320 bucks. Excuse me, to be 320.96 to be exact. And where is that? That's right around where this gap is right here. So I got the market taking us down to this area. Now let's look at what the traders, the big traders are thinking, and we can come in here and go to the trade tab, right? And we can come over here, and I already got it pulled up. So I'm gonna close this back up and just show you where I'm looking at. I'm all the way out here, 189 days. Let me pull out my pointer. I want to be able to show you guys where I'm at. I'm way down here, right? This is where I'm at, 189 days out. So you may say, why am I looking down here 189? This would be considered, why are you doing that? Erase. Here we go. I'm trying to erase this. Let's see. There we go. So you would say, well, why are you way down there? This would be considered pretty much elite. What, 30 days, 6 times 30, 180. That's about six months, half a year. Some people consider like it got to be a year to be elite, but that's a far out option. So let's come out here and let's look. I'm going to come all the way down to the 398 strike, which is right here. And if you look, you'll be able to see, if we look right here, right where I got that yellow line, if you can see that, we've basically got 10,000 contracts. Somebody placed a trade out here that's about 10,000 contracts. You got 10,000 right here. Well, it actually says 10,005, 10,008. So someone has come in and put, but you can see whenever you see 10,000 over here and 10,000 over there, those trades were done today, this morning, right? So those are large trades. So someone is putting on a lot of risk out in the future on this particular, on the QQQs. And how I've seen it, on Thinkorswim, they have something called Trade Flash. I'll show you guys how. I don't have any problems like showing how I find stuff. And I had this up, and I don't even look at it all the time, but I just happen to be looking at it today. And you can see right here, I have my watch list up right in here, but you can put whatever you want right there to look at. So I'm going to put the Qs up. And if you see, once I put the Qs up, it's only going to show the Qs. And you can see all of this trading going on. Now they broke this trade up. When it first came through, it didn't show like it is now. It didn't show buy. That's not even at the same expiration. You see someone bought 4,484 weeklies on December 13th, 2021. So we can come in here and look at that one. If you notice, if you're watching CNBC during the halftime report, you'll see that one of the Nigerian brothers will come on there and they will talk about unusual option activity. But this is what they're talking about. And I'm showing you right now how to find this on your own. I'm looking at, all I did was come over here and look at December 13th, 2021. That's 3 days from now. Let's go and see if we can find those puts. 4,484 puts. What strike is that? That's 388 right here. You actually got 18,000 right here. So you can see a lot that's unusual option activity. Someone's out here buying puts for an outside move going into the weekend. Now it was already 19,000 open. That's what open interest means. These 19,000 were already here. Now, I don't know if they're, now you don't know exactly if they're closing, they're selling them or what, but it's a lot of that's unusual option activity, right? So now let's go look at some more. We got June. See right here it says I'm gonna close up my screen so that I'm gonna try to make this a full layout so that you can see. Take me off of here. Just trying to make it bigger if I can for you guys to see. But even if you just bring up Trade Flash and you look at it, start messing around with it on your own. The next one up is like 17. So June 17th, 2022. All right, let's look at that one. June 17th, 2022. I don't see 17 unless I'm looking at January. My bad. Here we go. This is that one back out here. We got 8,600. So that's probably, this is part of the one that I pulled up before. We don't have to look at that one again. Let's go back. Let's look at, if we go up, we see at 944, we got, 1022, January 21st. Let's look at January 21st. Jan 21. They're 42 days out. That's more of a regular range option. We got 2,500. Woo. So you got 2,500 puts. Then you got another 2,500 puts on the 395 strike. So we got 400 strike and 395 strike on the put side. Then we got another 5,000 on the 390s. Then we got another. So right here, these three, we got 2,500, 2,500, and 5,000. And they're all at different strikes. So you got a put. They basically almost like a put ladder. Puts here at 400, puts at 395, puts at 390. So let's go over here and look at these. First of all, as I'm doing this, guys, hit the like button, hit the subscribe button. It take to learn how to do this and to sit here and watch these. You know what I'm saying? That's it takes time, and then it also takes, like, it took me time to learn how to do this. So, and I'm also sharing this information for free. So you can come on here and you can look at let's start at 400. Let's go to the 400 strike. So you got puts right here. You guys see right over here, I'm looking at volume at the 400 strike. I'm at January 21st, 2022. And you see 4,625. Someone got puts right here. Now, I don't know if they bought these puts or selling them. I would guess that they buying these puts. I don't know why you would sell in the money. It doesn't make sense to sell an in the money put at 400 at the 400 strike, right? That wouldn't make to me, unless they. So that's the one of the things, like, you don't know exactly, but you can kind of, if you understand markets, right here, because so what you're looking at, look, you got resistance right here. Here's 400. So if you're buying a put right here, like, hey, you're saying like, hey, this is resistance. So you buying a put to try to take advantage of a downward move, which is what I think as well, right? I could be wrong. They could have been closing a position, but these all at this. So you got these right here at 1022. At the same time, now this person came right behind and bought also placed puts at the 395 strike. So they came right here and put more. You got 10,000 right here. Then they came again at 10. All this happened at 1022. Three big trades like this. Another 5,000 at 390. So let's go to 390. Look, boom. You got 9,000 total right here and 27,000 right here in open interest. If they were all at the same strike, so if I would have seen like 2,500 here, then another 2,500, then I would have seen 5,000 come in, I would have said, hey, they day trading. I would have said they opened 5,000, layering in, and then they came in and closed them out in one time and closed out 5,000 when they got that little down move, because we did get a little brief down move. If I pull this up and look at it on the 1 minute, you'll see what I'm talking about. You did get like a little down move right here, right? So they placed the trade at 1022. Check it out. They placed the trade the trade at 1022. Here is 1022. You see this candle right here? This is a 1 minute chart. You got to pull back and boom to the downside. So from right here at 397, we got a $4 swing. So it's possible that they took a bet on this down move right here. Boom. So they could be day trading. They made money here, took it off, and then it's popped back up, and maybe, but they put them all on at the same time. They bought some more, and I haven't seen where they came in and took them off. Not yet. Let's go up some more. Let's come back in, because this all happened at 1022, and then at 1039, we see December 17th, 21. That's the 3-day strike. We see some more puts. And then if we come back up, here we go at 1040, we see 4,000 at the 378 strike. So somebody came in and bought or sold on the put side at the 378 strike. So you see right here, there it goes, 4,148. So you got some more right here. So it's some heavy trading going on. And all of these trades right here are 42 days out. And I don't see any. Now these trades, these news flashes that's coming in, they all on the put side, besides these one right here with the 8,600 on the call side. So you got this. Now this could have been, like I said, this could have been at 398. I don't know if they bought the straddle, right? I would have to come out here June 17th. They bought the straddle, or they're doing a combo. So if you're doing a combo, it's kind of, it will be hard to tell like whether they're doing a combo or they're buying the straddle. That this would be a very expensive buying of the straddle if they did that, which it's kind of hard for me to fathom someone putting that much money, 10,000 contracts, um, at that price at $2,600. That's a lot of money. You do the math. And so that's why the numbers are so big. I can't wrap my mind around that. Why that could be what they were doing, and just because of how large that would be, I would think that they would be doing a combo, and so a combo would look something like, you know, a combo would look something like let's a combo would be something like, come here, buy that. Oh, nah, you don't want that. It depends on how you do it. You sell, let's see, if we sell this put, buy this call, you got a combo, right? And that means you'll be doing that for credit. What you would be doing if you did 10,000 of these. I don't, I actually, all I know is they placed this would be, if they bought these, this would be a huge trade. It would be huge. Let's see. That's why I can't fathom them. I can't fathom someone doing that. That's a huge trade, man. 10,000 of those. And so at $5,400. And if you analyze trade, this is what it looks like. So they're betting on an outsized move. But either way, you know that there's a lot of option activity going on here, right? And they need a big move for this. And so this is just one of the ways. And like I said, you can put on the Thinkorswim platform, you could put up, you can come over here and you can put the trade flash on up here, and you can see where it, and it's going to take time for you to learn how to read trades and stuff like that. But you will know that you may not know exactly what they're doing, but you can see the large amount of trades coming in, right? And then like I showed you on the one with the 3-day option, that looks more like a day trade. Like they were taking a small bet that the market was going to go down. You got a big move to the downside, and then they made money. I'm almost thinking could have been an algo. They could have had something set up to where it makes those trades on its own. And basically, just so you know how to read this is your T0 line. So this is today. So this is how much money this person would make. This is where the market is right now. And so let's say today it moved down from where it's at $10. They would make $95. If it moved up, let's say about $10-15, they would make $126, right? Now, but that's a lot of risk to just make that little bit of money. So they're probably gonna hold this for a while. So you want to look at it, you want to see how it's gonna progress over time. Like, and one way of doing that is day stepping. You come up over here to where it says lines. I'm gonna put in day step. I'm gonna do +4. So what I have now is 4 lines. And since it's out so far, I'm going to make each one of these probably 30 days apart. And so you can look at each line and see. So if by January 9th, so if they let's say by January 9th, they had a move. I'm going to bring it down some. Let's say 20 days. Let's look at this 20 days from now. Let's say by December 30th, they would need, and they got to move down to, let's say, where I got it. I think the market's going down around 321 at some point. So let's say in 20 days it's there. They'd make $2,942. And all I'm looking at is these lines down here at the bottom left of my screen. This is showing you the progress of the trade. as it progresses through time. But if you had truly bought like straddles, you it can go up and you can still make money. See, but you need an outsized move. You really do need a big move. If the market stays where it's at, kind of like now, you wouldn't make money. You'd lose money because you bought the option. So you're gonna lose money on theta decay. So guys, I hope you got something out of this. And then wipe this out. Just come up here, click reset. It's gonna take everything back to where it was. It's gonna ask you, do you want to proceed? Click yes. Sets it back. Right, and then I'm gonna X this trade out because I'm not making this trade. Hit delete, and that's that. So that's one of the ways how you look at unusual option activity. Come over here, and if you don't know how to set it up on Trade Flash, once again, this is on Thinkorswim. You will come down here, hit add gadget. It's a plus sign down here. I don't even know if I'm gonna take the like button and subscribe banner off so you guys can see. I don't think you can see down there. All right, come down here to the bottom where it says where my arrow is. You're gonna come down here where it says add the plus symbol. Click that plus symbol. It moves up, and then you're gonna see the gadgets down here, and then you can click on Trade Flash. Once you click Trade Flash, it's gonna pop up, and I don't have to do it because I already got it up here, and it's gonna put your Trade Flash up here. Now you can pop this out and make it big. Like I can click on this up here, detach gadget. I got more than one monitor, so I can take that and move it to another monitor. If I click it and move it, it's not, you wouldn't be able to see it on the screen, so I won't do that. You can also switch gadgets here. I can put another gadget here, but what I have here is Trade Flash, and then you can come up here and put whatever watch list you wanted to monitor. I have it monitoring my name. You see it says TerrenceRe. These are all the things that are in my watch list. It's going to monitor large trades there, and you'll be able to see that. And you can go there and kind of look. A lot of times, even if you don't know what the option is that they're doing, you'll be able to go there and you say, well, it was a large trade there. So where's the trade? And then come look at the chart and see what you think. You can put it on the S&P 500 up here. Another one I like to use is come up here and put weeklies. I will come up here, click on this little gear, and then come down to where it says public, and then come down to where it says weeklies, right? And what that says is all the equities that have weekly options, it's gonna show all the large trades on there. And what you see is it was a big delta trade in Kroger. So a big delta trade just mean like 25,000 deltas at this particular strike. The put at 84. So it was done at 84 cents, and you had to go there and then you go look at 25,000 at 84 cent, basically $84, and then that's how many deltas it is short. So they could be closing out a position or it could be establishing one. So you just go there and kind of look at it, and then I would come over here. Me personally, I would come over here and look at Kroger. Like, what's going on with Kroger, right? This is a 1-minute chart because I want to see. You can see it's trading in almost like an ascending wedge. So hey, maybe they buying puts saying it's gonna break back through the bottom of this wedge. And then you would go and look at I would go and look at the timeline. This is April 20. This is the 14th of April 22. So I will come over here to the trade, come back to the trade screen. You can also click on it right here and it'll bring it up in there, but it's going to bring up the option, which is a little bit tricky. So I would just come over here to April 26. This is 125 days out, right? And then I would come over here and look at the 37 strike. Is that where? The Kroger, yep, 37 on the puts, and boom, there it is, 25,000. Just that easy. Somebody got 25,000 puts right here at the 16 delta. Now, 37, the stock is at 44. I don't know whether they bought them. I don't know whether they sold them. I doubt very seriously that they sold them though, but hey, they could be selling the expected move. Who knows? That's a big trade. That's a big trade. 25,000 contracts right there. That ain't no regular retail trader. With this move right here, that maybe let's look at it on a daily and see what it looks like. So maybe they, I don't know. I wouldn't come out. I wouldn't sell a put this far down though. You can come right here and out. If anything, I sell puts like right here, collect more premium. But maybe they're saying we're gonna sell a one standard deviation move, and by selling 25,000, you're taking in premium. And in order for the market to beat you down here, it got to do a lot. It does have an IV rank of 33, so it's pretty rich. So, but basically, that's what unusual option activity is. Hit that like button, hit the subscribe button. You don't get it, watch this video over and over again. Put comments in the comment section for me to things that you want me to go over and come back to. I have no problem, showing you guys going to it more in depth, and then you can get to clicking on the trade, seeing what it's looking like. Click on the analyze tab, and you can kind of like learn options that way. Learn follow what the big guys are doing, or at least just look at them, and then you can kind of get like try to get into their heads or whatnot like that. And you also sometimes it'll help you find trades. Like it'll bring you. It may be something you wasn't even looking at. You see that someone's making a trade on it, and then you just come in and be like, okay, I see what they looking at, and you can play a trade or even get long stock or anything like that. So with that, I'm gonna be out. Let you guys go and enjoy your Friday. Be careful with your risk going on to the weekend. We got a lot of risk out there. Horrible numbers on inflation came out this morning. We got geopolitical risk out there with Russia. Russia showing a little aggression towards Ukraine. United States of America obviously doesn't want Russia to start taking territory. Um, if they were to take Ukraine, possibly China sees that, and then maybe China looks to take Taiwan. So then you start seeing the superpowers arranging for what may be some type of war. Doesn't that mean it has to be like a physical confrontation with soldiers? It could be um, a something on a different type of scale. But you can see the players. If you're looking at the chessboard and you know the players on the board and you watching them move. Now you got to play game theory and start looking like, hey, what's the next move? Start plotting out why are they doing this and why would they be doing this? When countries start um, threatening to invade other countries and take their territory, it's because they're trying to get in position for something that they may do later on down the line. That's just my take. Um, and I hope you enjoyed that little take. I like politics, and I like to I'm a thinker. So, but with that being said, man, I'm out. Peace.